You are listening to a True North Eager Beaver media podcast. The True North Eager Beaver podcasts are proudly brought to you by our founding sponsors, the Miss V Mysteries from Corvid Moon Publishing, your source for science fiction, fantasy, and cozy mysteries featuring a broad diversity of characters. CanadianTarot.com, your uniquely Canadian online eclectic tarot community and forum, and The Pepper Master, hot pepper sauces made from fresh farm ingredients to thrill your taste buds and expand your mind.
Well, good morning and hello, kids, and welcome to Season 3 and episode number 164 of the Daily Beaver Morning Show here on the Grider Media Network. And good morning to you, Cubs, as well. Today, pre-recording day, is Tuesday, July 11th, 2023, for broadcast on Monday, July 17th, 2023. And 1 week ahead, the Weather Network says it will be a hot day with a chance of thunderstorms here at the Beaver Lodge. Let's see how that works out. I'm your host, the Eager Beaver, pronouns he, him. Hey, Mr. Beaver, eh? And with me, as always, is my dear friend, Mr. Grizzly. Of course, a big thank you goes to our podcast's founding sponsors, The Pepper Master, the Miss V Mysteries from Corvid Moon Publishing, and CanadianTarot.com. As I am actually out of town with my beaver sweetie for my nephew's birthday today, as you are listening to this, kids and cubs, today we have prepared a very special Monday morning treat for you. But before we start, let's say hello to Mr. Grizzly and ask him, how will your mental health be a week from now?
Well, good morning, Mr. Grizzly, and
Good morning, Mr. Grizzly.
Mr. Beaver. See, look, I'm a mess. I'm a mess. I should get more coffee. I have a raging migraine right now, so yeah, I might have to put some clip-ons on just to shade from the. Because if look at what happens if I turn out the 3 lights that I use. It's like, oh, that's not good. That's not
No,
good.
so you've got lots of brightness on you. Yeah, that's tough on the eyes.
It is. It's difficult. So maybe I'll put on my sunglasses. See? Sunglasses. That's the way you do it. Nice and slow. See?
Going to become too cool for the lodge.
I guess.
Joining us today at the Beaver Lodge is a fellow Crier media personality. He's a former award-winning broadcaster turned trader based out of Alberta. He has over 10 years of successful active investing experience, and since 2019 has been mentoring retail and institutional traders at stockmarketmentor.com. His history in the media gives him an edge in being able to interpret a lot of information quickly and break it down into straightforward analyses. And as the host of our network's active investing podcast, Hot Wallet, he's bringing all his skills together to help Canadians understand the markets, as well as gain some investing literacy. Today, he is here to talk about the economy and other matters related to money, kids and cubs. please put your paws up and give a round of applause to Mr. Scott McGregor. Welcome to the Beaver Lodge.
Quite the intro. Thanks so much, guys. I really appreciate you having me. It's an honor to be on the show.
Oh, we're so glad to have you. We've been trying to have you on for a while, but of course,
scheduling.
Well,
It's tough. It's tough.
Early
No,
in
I got
the
it.
morning is when you're getting ready to do your stuff.
Exactly. Yeah. The last time you guys asked me to do one, it would have been 5 o'clock in the morning my time.
Yeah,
And
so
that's usually when I'm busy trying to get ready for the market open, because the market opens my time at 7:30 a.m. That's 9:30 your time, and so
Right.
that's a busy time where I got to like catch up on whatever news happened, the day before, the week before, and then I'll write like a big long thing for our subscribers at stockmarketmentor.com, and then I got to get my watch list together. And I don't know if you can see behind me all these green things back there.
Mhm.
I scan about between 300 and 500 stock charts every single day to look for opportunity for people who are looking to trade the market actively every day. And so, yeah, it's a lot of work in the morning. And so, unfortunately, unable to do it, but I'm glad that we're able to connect this time.
Right.
That's a busy morning, sir.
Yeah. There was it's funny that you mentioned that, because I am somewhat familiar. I'm nowhere near what you do, but I invest for myself as well.
Oh,
I
great.
have some stuff with people, but I have a little bit of play money that I use for
Good.
myself. So, for example, my tax-free savings account and all of that. But I'm not as active a trader, because active traders, I guess it's sort of synonymous with day trading.
A lot of times, yeah. I call myself a swing trader. So that means I
Okay.
can hold a position for anywhere from a couple hours to a couple days to a couple of weeks, depending on how the trade works out.
Mhm.
So I have a typical swing trading strategy based on technical analysis. So I'm looking at chart patterns every day. And then I have a few chart patterns that I trade on a consistent basis. And so it's really only a handful of things that I'm looking for in the charts. That's how I can scan through,
Mhm.
500 charts. I just cycle through and go, go. Oh, that one has what I'm looking for. And then okay, put that one on a watch list, and then go. Oh, that one has what I'm looking for. So it's just basically coming up with a portfolio of different chart patterns, and then just becoming really good at only doing those chart patterns. And so that's really what technical analysis is all about, and day trading mastery and stuff. You want to focus on doing one thing, doing it really well, and then doing it over and over and over.
Mm-hmm. Mm-hmm. Mm-hmm.
And passive investing, which is what you're doing in terms of a tax-free savings account. But it can be very similar. Maybe you're investing on a fundamental basis where you're like, I like this company, I like the story, I can kind of see what the potential is, and now I'm going to put money to work for a certain period of time. The
Mhm.
difference between you and I is just that our time frames are typically shorter. So my time frame is shorter than yours. But that said, I have longer term investments as well, where it's like I'm going to buy this and I'm going to hold it for 2 to 5 years,
Right.
and then within that time, I'll find out whether I'm wrong or right.
Mhm.
Right. Yeah. Okay. I'm sort of a little more like that, but I am more active. Like I will, every month or so go in and check things and maybe flip
Yeah.
things around or sell a little bit or move around. But you know, less swingy, more sort of like 20, 15, 100 day.
Yeah. Yeah, no, that's a good way to
Swings,
do it. That's a
right?
good way to do it. So,
Yeah.
and I think it's important for everyone to have a toe in the market. If you're unable to do kind of what you're doing in terms of checking it once a month, which I think everyone can do, that, they have the
Yeah.
platforms on our phones nowadays. It's easy
Yeah.
to log in and see how you're doing. But I think everyone should have, a toe in the market just to get an idea of how it works, why it works the way it does. And and you can learn a lot about not only how the economy works, but learn a lot about yourself and kind of the type of investor that you really are deep
Mhm.
down. Because everyone trades differently. Even you can learn the exact skill of trading from someone and learn exactly how they do it, and it might not fit with what you actually want to do and
Mhm.
and how you deep down want to trade. And so it's very based on your personality.
Mhm.
And I learned that by making a lot of mistakes in the market, by learning, like I try not to day trade. I
Yeah.
try not to zoom into those 1 minute short-term time frames,
Right.
because it's like a heart attack where it's like, oh my goodness, I'm up a lot right now. And if I sell now, I'm gonna have a great day. but then, a lot of times it'll go up, it'll go down, it'll go all around. And that can kind of give you, an emotional roller coaster in some way. And so I've kind of developed a strategy where I typically, if it's working well, I'm not on that roller coaster and I feel comfortable in kind of my skin. And so, it's, for anyone who's listening right now is like, wants to learn about investing, learn about yourself, because the more you learn about yourself, the more you'll learn about what kind of investor you typically can be.
Mm-hmm. And as well, the type of investor that you are is going to change over the course of your life.
Oh, totally. Yeah. Based on your needs, right? Because it's based on, like someone who is, I actually had someone email me last night, a member of our website, stockmarketmentor.com, talk about how they're retired now. And I said, I wrote back and said, well, you can't risk the biscuit.
Right.
You got to keep it intact. And so, maybe you're not going to go all in on a speculative asset or trade when it's your retirement savings that you have, and you don't know how long you have to live, and so you need to keep that intact. And maybe you want to be a little more conservative, look at an index fund trade, and just kind of maintain that nest egg. And that's different from someone who's in their 20s who has a lot of time to make up for the ups and downs and the losses and the mistakes and stuff like that. So you're right on.
Yeah.
There was a gentleman I met a bunch of years ago who had retired at 35, and which I thought, well, then, man, your life must be boring. And I mean that genuinely, because what do you do? Everybody you know is at work. All your friends are at work. And he retired at 35 because all he had invested in were dividend-paying stocks, and he started when he was 19. And by the time he was 35, he had enough dividend cash rolling in on a monthly basis that he didn't have to work anymore. So he retired from his day job and just trades here and there. Like he's not into it as heavily as you are, because he said, I live a conservative lifestyle. I don't spend a lot of money. I don't take big trips, but he says, I'm comfortable enough that I can stay like this, for the next 40 or 50 years. I'm like, damn, here I am grinding out 75 hours a week. And
no, and that's the story of a lot of people, that they get in early, that they learn about financial independence, they gain it, and it doesn't mean that they're driving around in Lambos and making it rain everywhere. Some of the richest people I know are what they call like a millionaire next door, where you don't even know that they're a millionaire, and they just go about living their life, and they still they still work in the market, they're still actively monitoring their stuff, and they take conservative vacations because they know they want it to last a lifetime.
Yeah, exactly. Can we start with the overall sort of financial picture and then sort of go back in?
Yeah, certainly. So, everything I talk about today is going to be based on the stock market. That's my view on the economy. That's forward looking. The stock market prices everything in advance. And so what we have had over the last couple of years is, I'll start at the pandemic. The pandemic came and markets everywhere crashed, and we saw portfolios, crash and lose some of the biggest gains, in recent history since the 2008 financial crisis.
Yeah, because the stock market was doing well. It was like on a several year continuous rise.
Yeah, it was over 10 years, I think, over 10 years. And so, from like basically 2008 to 2019, it had just, kind of been on an upward trajectory. And so, that had been going well. And then what happened is the bottom came out when the pandemic happened. And out of that, we had central banks here in Canada, in the United States, and around the world print a ton of money and come in and support the market. They basically flooded the market with cash. And we ended up having a bit of a K-shaped recovery where asset holders, stockholders, etc., they did really well because, the market's fine, and the Federal Reserves and the central banks are coming in to support my portfolio. Problem is, if you didn't have assets, if you're somewhere in the middle to low class, can't afford to invest, just everything got more expensive for you. Is really, you got your, maybe you got your government payout checks, but everything just got more expensive and harder to get. And so we had this K-shaped recovery, and it kept going for a while. And then what happened is, obviously, we saw supply chains really kind of struggle under the pressure of everything shutting down. And the way central banks have been tackling this is by raising up interest rates. And this is coming off of guidance where they told everyone that they weren't going to raise interest rates. Nope,
Right.
rates are going to be lower for forever. It's basically, it's free money forever, and that's how it's going to be, and that's how it was. And what ended up happening is that they raised interest rates at the fastest rate of change in all of human history.
And Canada did it faster than anybody else.
That's right. And so if you think about back in the 80s, in the 80s, they raised interest rates again. Maybe they went from 11% to 20% or 10% to 20%, just to make the math easy for people. It's like, okay, but that's only a double. So that's, that's a lot. That seems like a big jump, but it's only a double. What they did for us over the last couple of years is we went from 0 to 5%. That's a 500, or, in some cases,
a lot.
1,000% increase.
Yeah.
And so, what we have seen then is we have seen inflation come down because the idea is that they want to crush demand. Okay, supply chains are a problem. There's not enough stuff in the stores. Cars aren't on the parking lots on dealerships anymore. We need to crush demand so that we can allow supply chains to catch up. And so that's kind of been their playbook. And so now we're in an instance where rates are still high. Inflation in some areas like Europe hasn't really come down. It has come down in North America. I've seen some instances where in the United States, it's actually around that 2 to 3% range. But the way that the Federal Reserve in the U.S. measures it, it looks like it's still up around 4, but other metrics say that it should be lower. And so the trajectory has been down, which is what we want. But they want to make sure that it is down, and they want to make sure that it stays down. And so their answer for that is to keep interest rates higher for longer. And so that's both a potentially good thing and a potentially bad thing, and for many reasons. One of which is, well, now everyone's mortgage payment is way more expensive, so they can't afford to buy as many goods. They're not taking as many trips, and the trips that they are taking are much more expensive. I have a friend of mine who is a travel agent, and she said, we said, maybe we want to go to Disney, take the kids to Disneyland or something. She's like, oh yeah, this isn't a good year. It's probably going to be about $20,000. And I was like, what?
Yeah.
Like, that's crazy. And this trip typically would have cost around $5,000. But again, we're coming out of the pandemic, and now everyone's vaccinated, everyone can travel, and now everyone wants to travel. And so again, we're coming up to those. Yeah, exactly. Supply and demand. That's how it works. That's how the free market works. And so, so up until this point. So now where we are is tomorrow, the U.S. Federal Reserve, and the rest of the world will be looking at what CPI is. Now, CPI is a core inflationary gauge that central banks use to measure what the inflation rate is. And so tomorrow that comes out at 8:30 Eastern time. At least, on the day we're recording this, tomorrow is Tuesday, July 17th, or sorry, July 12th. And so that's what we're going to be looking for as a gauge to see whether or not the Federal Reserve will continue. And when I say the Federal Reserve, I talk about U.S. And I apologize for that. I know it's an eager beaver, but I trade American markets. So I live in America in my mind. And so, it's all about the Federal Reserve, in my opinion. So they're going to be looking at what CPI is. And then in about 2 or 3 weeks, they're going to then tell the world whether or not they're going to raise interest rates again. And so the market is currently pricing in that they are going to raise interest rates. But if that number that comes out on July the 12th is lower than expected, then that could signal that the Federal Reserve doesn't have to do anything, and they can continue to pause on interest rates. Now, we saw Canada do that. They took a pause, and then they waited, and they got new data, and then they got new data and said, no, we're going to jack it up again. Even though we're seeing inflationary forces start to drop, and it really does look like the air is coming out of the balloon in terms of inflation. Sorry for talking so much and ranting.
No.
I wanted to really give you guys a big sky view of kind of what's happening, how we got here, and where we are right now.
Right. So now we have the interest rate situation. Like you said, I think we started at the lowest we got was 0.25. We're right now at 4.75. And it's estimated that the Bank of Canada will probably raise them the next time based on the US and Canada CPI data. But the Bank of Canada seems to have indicated that they will stop at 5. They've been sending signals, whereas the United States seems to indicate that they might go a little higher. I know our interest rates have sort of decoupled a little bit because we had a pause before. They're not. But what would happen, for example, I think one of the things that people are fearing is that, for example, the Bank of Canada stops at 5 and let's say the US Fed goes up to 6 or 5. What happens if there starts to become a bigger spread between the interest rate, the prime rate from the federal bank in the United States and in Canada?
Well, our economies are different, right?
Mhm.
Like
Right.
we're a very resource-based economy and stuff, and America is more of a consumer-based economy. And so I don't think it would make that much of a difference in terms of like just general life. You know what I mean?
Okay.
So yeah, I don't think it would be that big of a deal
Would it affect the
because
dollar?
it could affect the dollar based on, but what we've actually seen a significant weakness in the U.S. dollar, and so
Mhm.
what I think could happen is that the Canadian dollar could strengthen versus the U.S. dollar. That's a
Okay.
potential, just because we have seen such some weakness in the U.S. dollar over the past week and a half.
Now, doesn't
Okay.
that adversely affect our economy, though? When the Canadian dollar goes up, we tend to watch trade dip a little bit. Correct me if I'm wrong, because it's more expensive for them to buy goods and services and from us. So it's like
Mhm.
I want the dollar stronger, but at the same token, it's kind of better for the economy if it's not super strong.
You're right on. You're right on. Yeah, we want that Canadian dollar right around 75, 85 cents US. That's
Yeah.
probably a pretty good sweet spot because we want people to buy more of our goods, more of our resources and stuff like that. So, that's kind of my thought on that. I'm not a certified macro analyst. I'm more of a macro tourist. And so when I hear these things, when I look at when I look at the U.S. dollar, for example, and I see it dropping, my first thought is not how will this affect shipping and that kind of
Absolutely.
thing. My thought is how is this going to affect equities? And
Mhm.
Okay.
typically, if you have a dropping U.S. dollar, then equities rise, and they do that because they want to offset the losses of the buying power that the dollar has.
Right.
Okay. Interesting. Now, so we have the interest rate situation. We have CPI, and then the two numbers on the macro level that people tend to look at is the jobs numbers and the GDP numbers.
Mhm.
Now, the most recent GDP data I think that we have is for June. No, end of June for May, uh, and it says that the economy. Sorry, I lost the thing here. Uh,
Did your
it says
computer
May, but
bork?
no, it says May, but it says May, but it's giving me numbers for April for some reason.
Okay.
So I think it was in June. I think they had those numbers are 1 month delayed. So it was numbers in April, saying that the economy had flatlined in April, but they estimated a little bit of a rebound in May. Um,
And that's
I
that's
think the
what they
markets have
want,
found that.
right? They want the economy to slow down to bring inflation down. And so
Mhm.
everything that's happening, this is all man-made, it's all constructed, and this is what they want. They want people to lose their jobs. They want businesses to slow down and shut down. And the reason they want that is because they want prices to come down. They don't want wages to go up and businesses to essentially have to pay out more when they're getting less.
Mhm. So here's the thing about that. That's a thing that's being discussed a lot. Why opt to make sure or try to make it so that people have fewer jobs rather than working on the other side of the economy, making sure that maybe we don't need to have that much profit or beat the past quarter by that much this time and keep more people employed.
Well, it depends what metric you're looking at. Are you talking about company specific profits and stuff like that?
Well, yeah, or just sort of general, because I'm guessing the Bank of Canada is also looking at the general macro numbers. It's I just hear the debate and I don't know the answer to this. Is why I'm asking, because people keep
Mhm.
on saying, well, why are they trying to make reduce salaries and reduce jobs rather than just say, rather than making 12% this year, aim for 8 and let more people keep jobs and more people.
Yeah, so I mean, that's not up to the Bank of Canada. That's not what
Okay.
they're trying to do. They're just trying to generally slow the economy to bring prices down. And that comes at whatever cost it comes at. Because if things become too expensive, nobody wins. Like, it doesn't make sense
Right.
for us to have $12 jugs of milk. And so they're not focused on the short term. Their thought is, okay, when prices come down, we can rebuild that foundation. They're calling it a soft landing, where
Mhm.
okay, the economy can find some level to level out, where prices are reasonable enough that people can still survive, and then there's potential upside in terms of those jobs starting up in the economy, kind of bouncing back in a way. But the problem then becomes inflation. If everyone made more money, let's say everyone makes $10,000 more now than they did, a couple of years ago, that's just going to make the goods more expensive. It's not going to
Mhm.
help anybody, and so giving everyone more money, we saw what happened. Everything became more expensive because the amount of goods stayed the same, but the dollars that were in the system increased.
Mhm. Okay. So when it comes to jobs, um, the latest numbers that we had is that the unemployment rate rose to 5.2%. A lot of people started to panic. Like it's not more on the political side more than the economic side.
Mhm.
They
Okay.
said, "Oh yeah, unemployment's going up," but it's only up like I think 0.5% since the lows that we've
Hmm.
hit, and they were record lows that they've hit. And they were also talking about wage growth. And for the past few months, wage growth is actually higher than the CPI inflation rate, which wasn't the case, right? Inflation was growing faster than wages, even though wages were growing.
Hmm.
Inflation was growing. So, in terms of real economic power, the individual wasn't gaining, they were still falling behind. But for the last 2 months, wages are growing faster than inflation. And even though there's been a slow in the net number of wage growth when you couple it to the decrease in inflation, last time around, inflation decreased by 1%, but wage growth was 1.1. So you actually got a net of 0.1. So it's still growing faster. So it's still growing faster. We're still adding jobs, and the GDP is still growing. So we can probably assume that the Bank of Canada and the Fed, well, not the U.S. Fed because we're small. Canada's a small economy compared to the United
Mhm.
States, but that the Canadian um, central bank will probably raise rates.
Yeah.
Um, but my thing is, um, given there doesn't seem to, there's nobody is saying that wages will stop increasing higher than the rate of inflation like in 2 months or 3 months. Nobody's predicting that.
Hmm.
And with jobs, the jobs number still growing, is it, could there be something else that's being factored in that we haven't been talking about the last year and a half? Because, for example, when we're talking about inflation, we've got the core inflation, we've got the food inflation specifically. Yes, and those have been decoupled.
Hmm.
Right, the CPI is down to 3.4%, but in food inflation is still somewhere around 9, and everybody has to eat. So there has to be factors other than, for example, as Pierre Poliver's been saying, free money or printed free money that contributed to that. Is there something else, maybe on the employment side or on the wage growth side, another factor that maybe is usually not as prevalent, but might be acting right now and that we're not aware about and we're not really talking about? Because it seems very weird that it takes about 2 years for everything that the Bank of Canada does to go right through. And they started in March of the previous year. So we're at about a year and a half now. And while CPI is decreasing, the rest isn't.
Yeah, that's a
Those
great
two things
question,
are
and
not
then
being
that's
achieved.
exactly what I was going to say. Is it usually takes a while to find out what their increases or decreases due to the economy. And so right now, there is a bit of a narrative out there that these high interest rate increases will eventually hit not only homeowners in terms of some new homeowners not being able to make their mortgage payments, but also commercial real estate.
Mhm.
People who maybe aren't going back to work in an office anymore, or people who have moved their companies from having a central location to, okay, we're all remote now. And now all of these empty office buildings are around. If you drive downtown Calgary, for lease, for lease, for lease, that's all
Mhm.
you see. And so I don't think we've seen kind of the bottom fall out of the commercial real estate market yet. And so that's one thing that I think, a lot of people, at least in the circles that I go in, are bracing for. A lot of people think, oh, commercial real estate is the next thing to drop because everyone's holding these leases and no one's coming in the buildings. And so that's one thing that I think, could potentially break the system going forward. Earlier this year, we saw some banks actually fail in the United States because of, again, all of this happened because they said we're not going to raise interest rates. And so these bankers piled into these things that were interest rate sensitive. And then what happened? Jacked up, and then they have all these losses on the balance sheet. So I think from a market standpoint, the market is looking for interest rates to drop going forward, whether that's sometime next year, early next year or late next year, based on some of these factors of like, okay, people can't afford things anymore. We're going to see more foreclosures, more people are going to lose their jobs, et cetera, et cetera. And so that is one thing that I think the market is looking forward to, but we haven't seen that in the data just yet. And to your point as well, it usually takes a while for that stuff to come out. And so, we've seen things like the yield curve, which is typically a good
That's
gauge
on bonds,
for.
right?
Sorry?
That's on bonds, right? The yield curve?
That's right. Yeah, it's the 10-2 yield curve. And typically, you want the shorter one on top, and it's inverted right now. And that's a recessionary signal.
Right.
Now, the person who identified that signal, he's come out before to say, no, we think this could be a false signal. But a lot of people are still looking at that saying the yield curve has never been more inverted. And so there could be something bad still happen. But, we haven't seen that happen yet. And central banks won't do anything until it either happens or it's like, okay, guys, like, we're really worried. And by the time central banks get worried, usually it's way too late. So you're gonna see, you're gonna see things crash. And then you're going to see central banks react just like they did in 2008 and just like they did for the pandemic. And so I don't think that we're going to see a major cut in interest rates until, they get some really scary economic data. And usually, again, that's not going to be good for anyone. That's not going to be good for equity holders, at least not in the short term. That could bring a 20% pullback to the S&P 500. Right. You're going to see Tesla, start to drop as everyone goes, oh no, this is it. And then ideally we'd see central banks step in to be like, okay, no, we got this.
But you'd have a select group of people who would make a lot of money off of that.
That's right. Hopefully, Paul, that would be me.
Because there are people that play both sides, right? Where the market's going to go up, but there are people that bet on the market going down.
That's right. Yeah, I mean, you have short sellers, just like you have long buyers.
On that.
Yeah,
like you and I, Douglas, we buy things because we think they're going up long term, and there are some people that even now, even this year, say no, the market's gone up too much. I got to short this market, and so there's always another side to the trade. You got to respect that other side. And just understand why you're on the side that you're on.
Okay. Now, here's the thing I wanted to ask. There's one thing that I was wondering that might not have been uncovered yet, but you mentioned something about the central bankers that I want to touch on before I get to that. Why is it that when it comes to this, they wait till the news is really, really, really bad, which seems the complete opposite of the conservative planning that we assume from bankers?
Yeah.
Well, it's just because they don't know. To be honest, they're guessing. They're guessing just like the rest of us, except their guessing has to be based in research because they have to point to something to say, look, it's because I saw this. They can't just be out there and be like, no, this is my opinion because I think this could happen. They all have their own opinions on how they think things are going to go, but they have to rely on the data that's right in front of them. And if CPI comes out tomorrow or, on July the 12th, if it comes out raging hot, central banks have to react to that data point because that's the latest information that they have. And so they all have a framework that they work off of. And whether we like it, whether we agree with it, or whether we think that, some of the data could be skewed or whatever, they still have that framework and they say, okay, this is how we're running things. And they just stick to that framework. Just like an investor, as I mentioned before, I have a certain framework that I work for, and I know that this has worked for me in the past. And so I got to stick to that. That's the exact same thing central bankers do.
Okay. So I have a sort of a comment question, if you will. I guess it's more of a question, and I don't know if you can answer it or not. But so tomorrow, the 12th of July, is when the CPI numbers come out. Correct? The
Yeah.
CPI numbers. So why are we waiting until then? Because most of these numbers are tracked in real time. Why can't we just update it daily? Is what I'm getting at. Like, why is it a quarterly thing? Is there a specific reason for that? Like, I don't. It's not my area of expertise, as you can tell, but it just seems strange to me that, in 2023, we couldn't do this in real time on a daily basis.
So CPI is a monthly number.
Okay,
Comes out every
monthly?
month. Yeah, and then PPI comes out the next day. So it's it's the consumer price
Index, yeah.
thing index, and then it's the producer price index that comes out the next day. And so those come out monthly. And it's just how they have always done it. And if this was all on blockchain, it would be way better. And there are metrics that I use. There's a website called Truflation, Truflation. And if you look up that gives you, it's an oracle that gives you more real-time data. And I use that as an edge to say, no, I see inflation dropping. So I don't really care what the central bank does, though the information, will be acted upon by market participants. So if it comes out, burning hot, even though I don't, even though I see it in other data, doesn't matter. I can't focus on that. I got to focus on what's happening right in front of me as a trader. And so, I think, yes, Paulie, I fully agree that they should update how they do it. Sometimes they'll just call people and say, hey, how many people have you fired this month? Okay, 6. All right, we'll tax 6. And so a lot of it is very antiquated, very old school. But again, these central bankers, they just have been doing things for so long, and they have a playbook that they work from, and that's it. And if they shake the boat or rock the boat, then they have a chance to make a mistake, and then they don't get they don't get hired again because they are people who are appointed. I believe they're appointed by by the government. So that's my thought. Is it's more of a self-preservation thing than anything, than trying to really be a trailblazer.
Well, and Canadian banks historically are very risk averse, very conservative, which is how we got through 2008 when, the rest of the world was melting down. Canada was going, well, not too bad here, actually,
Yeah, I mean, they did really well. There have been instances where Canadian banks have been technically insolvent, very similar to what was happening in the United States. But we do have a pretty robust regulatory framework that banks have to operate in. But that's also why we don't have a lot of choice, because the bar is set so high. And so, it's a trade-off. Do I get a local bank that's more likely to give a small business a loan because they know the guy, or a big conglomerate that has a bunch of framework that they have to work for, and chances are you're not going to get it. So it's a balance.
It's a double-edged sword, right? In many respects, it's like, I'll give you an example. A friend of mine who runs a business, when he first started, he needed to outfit his company with several trucks because it's in telecom. And he went to the bank and said, yes, I need to borrow $100,000 so I can get these trucks and outfit them. And they go, do you have $100,000? If I did, I wouldn't be here. No, I don't have $100,000. We can't help you. He finally got his loan through Desjardins. So that's who he exclusively banks with now. And he does all his insurance. He does everything with them because they were the one bank that would help him out. And his business has done very well. And he's had it for over 25 years. But it was, when he was trying to get it up off the ground, it's like, as anybody would know, trying to start a business in this country is not easy. It's not. If you don't have seed money, as in, family money to get you started in the business, or somebody, if you're born into poverty, chances are you're never getting out of it. And I know I'm getting into a bigger, rounder picture here, but it's what it boils down to. And it's kind of a shame that we don't have a system that can help lift people out of poverty, because I've met some brilliant people in working in construction, some brilliant individuals, but they just, that's as far as they're ever going to get, right? And they grew up in poverty. They grew and they were never able to get themselves out. Many people do, a great many people do, but a great many people don't. And the system is kind of skewed to keep them there.
Yeah, and I mean that's the difference between having a small community bank that's more likely to give a loan and a big conglomerate, right? And so, that's why that they're I feel like America is more of a it is more like a commercial hub. They really do care about businesses, starting businesses, allowing people to start businesses. But then there's a downside of
Mm-hmm.
who pays for that loan if that guy's company goes bust and he has to claim bankruptcy.
Yeah.
And so, it is a double-edged sword.
So is
But
that
it's
why the
also
venture capital markets are so much more active over there than here?
Oh, 100%.
Yeah.
Yeah. Especially in, things like healthcare and whatnot and technology. I mean, they created a Silicon Valley, which is like a hub for innovation. And
Mhm.
there's nothing like that in Ontario that I'm aware of. Maybe Waterloo or something like that.
Canada.
Canada. Okay.
Yeah.
But that's not well known. People aren't flying from Europe that I'm aware of to
No.
start businesses in Canada.
They actually do.
Oh, really?
Yes.
Okay.
Silicon Valley North, but
It's Silicon Valley North.
Oh, really? Okay.
Legitimately.
Well,
Oh, yeah.
that's news to me.
Nokia's North American headquarters are there. You name a big company, they're headquartered. Many of them are headquartered in
That's
Canada
funny.
or have branches there. It's Silicon Valley North, legitimately.
Okay. Oh, interesting. I know Corel. I think Corel is a Canadian company. I think they're
Corel
there
was
too.
the one that sort of got to start Corel and Nortel, and then
Yeah.
and then Mitel arrived, and then everybody else, and yeah.
Gotcha. Okay.
New
Yeah, but
Bridge.
you know what I mean? Everyone thinks of
Mhm.
Silicon
yes.
Valley, right?
Yeah.
Oh, yeah, absolutely.
But then we've seen house prices. You buy a garage for millions of dollars in Silicon
Yeah.
Valley. So there's losses in that as well, where it's like the barrier to entry gets higher, the better the area comes, and
Right.
so.
I remember hearing reports a couple of years ago that, like in San Francisco, in the San Jose Bay Area, because Silicon Valley was doing so well, it was almost like all the artists and bohemians and whatnot had to move out because there was no place they
priced
could
out of the
afford
market.
anymore.
Yeah.
Right?
Yeah.
Which
Yeah.
then sort of changes the flavor of your city because, I mean, San Francisco's kind of known for that. Right,
Mhm.
you got the Haight-Ashbury district and all of that kind of stuff, and if the people that made that can't live there anymore, then
Mm.
is it
That's
Haight-Ashbury
interesting.
anymore? Right. Over a while, it doesn't do that. The other question, the other thing I was wondering about that might not have been noticed is I keep on hearing on the news that despite the rises of interest rates, consumer spending is still high, and that one of the reasons for that may be that not enough people have renewed their mortgages yet. They're still on their 5-year mortgage back
Mhm.
at the 0.5 or 1.25% interest rate, and therefore the extra $500 a month that they're paying on their mortgage, like I am because I have a variable one, that hasn't affected them yet, and that's all that money hasn't been taken out of the system yet. Do you have any thoughts on that?
100%. Yeah. I mean, when you print a bunch of money and when you give people money, and there's more money in the system, and that's what keeps inflation high. And so it's going to take a while. That's the point of raising interest rates, make the cost of money more expensive so that the money itself becomes more valuable and harder to get. When the cost of money is zero, money is flowing like crazy. We saw that over the last 10 years since 2008, where the market basically went crazy. And so, yeah, that's exactly your point. And we're seeing that in the US as well, where earnings on some of these companies are still pretty good. Apple is still, people are still buying iPhones. People are still buying NVIDIA graphics cards
Mhm.
and stuff like that, and AMD microprocessors. I outfit my whole computer over here with all AMD stuff. People are still buying that. Why? Because there's money in the system. They still have money, and so it's going to take time, Douglas, for that stuff to come out of the system, and then that's again where ideally you see the pricing power that consumers will have when money becomes more scarce, and then consumers have to actively compete for those dollars. We heard recently on a Costco earnings call that Costco was, they're starting to see their inventories really pile up, and they have to lower their prices. And so, Costco over the next couple of months, look for some crazy deals because stores now are starting to really pile up in inventory and be like, how are we going to get rid of all this summer stuff? It's already the middle of July.
Yeah.
So, that's one thing that I think it's coming. It just isn't here yet. And this is stuff that, people like Kathy Wood from ARK Invest, they've been talking about for a while of, these inventories piling up, and eventually it's going to work out great for the consumer. It just hasn't started yet because there's still so much money in the system.
Mm-hmm. Now, when it comes to mortgages, I was assuming the same thing because my mortgage broker had told me, because when the rates started going up, we were wondering if we should lock in. And he had suggested that we don't, because the rates would rise. And then eventually we would probably hit a recession, and the recession would probably lead the central banks to start cutting rates a little bit. And then we'd find sort of where we are. And at that point, then if you wanted to lock in, you would, because you wouldn't want to lock in at about in the first year. Then the recession happens, it corrects in the middle of year 2.5, and then for the next 2.5 you're paying a higher locked in rate than you need it to be. So you're paying a little bit more now, but to avoid paying a lot more later. I'm wondering, when it comes to that kind of stuff, like, I had no problem with the interest rates going up a little bit, because if we were at 0.25, if we were going to have a recession, then we'd be cutting into negative interest rates to try and stimulate the economy. So I don't mind an interest rate like around 3 or 4. So if you have a recession, you could cut it back down to 2, and still, you have some place to go. I think interest rates can be too low. But like you said, the speed at which they rose is a little dizzying.
The fastest in all of human history.
Yeah.
And, you're making a great point. If there is a recession, they have room to cut now where they didn't have it before. And so what happens typically is central banks historically overshoot. They overshoot to the upside. They overshoot to the downside. And so now we could, probably, I'm thinking, look at this, years from now and be like, yep, they really overshot to the upside there, just like they overshot to the downside from 2008 to 2019. Right. You know what I mean? And so you just, that's, as an active investor, you can use that as leverage and as an edge to be like, okay, I know they're going to go way too high because they've always done it before. So here's how I need to manage my portfolio. Like, we saw the market bottom in October. In October, the market bottomed. And why? Right. Because inflation hit the highest rate. And people thought, there's no way it can go any higher than this, at least not based on the metrics that we're looking at. And that's when the market bottomed. And ever since then, stock market's been creeping higher and higher. And why is that? Because the market looks forward. They're looking past inflation right now. They're looking for those rates to eventually come down. That hasn't happened yet, but that's kind of what what the market prices in.
So I'm just going to put a little graph here up there, like you mentioned. So right here, if kids look here, so we had a little peak in October 4th, and then back down around October 12th. That's where we hit the low.
That's right. Yeah. I vividly remember that day too. I was in Las Vegas on that day. Yeah. And I saw the news, and the market opened lower, like it gapped down. And I thought, oh man, we're either going to puke or we're going to bounce hard. And the S&P 500 ended up having a massive upside reversal and just bounced so hard. So that's kind of been, that bottom, you can look at that. That was the peak in inflation. And as inflation has gone down, what have we seen? We've seen the market come back up.
Yeah. But now since about November 10th, since about Remembrance Day, we're pretty much in a range.
That's right. Yeah. Yeah. We are just kind of chopping sideways on that chart on the TSX. If you bring up just the S&P 500 or the NASDAQ, what you'll see is a bit of a higher, S&P.
I'm having trouble today.
S&P 500.
There you go.
Now go out 1 year.
So yeah, I'm at 1 year now.
Yeah, and then scroll down and look how that chart looks differently.
Yeah.
And that, my friends, is why I focus on the American market. Because the Canadian market is more commodity based. There's a lot of oil, there's a lot of gas, there's a lot of minerals, gold, etc. But the American market is full of stocks like Tesla, Apple, Amazon, Google, etc. And you can get, in my opinion, far better returns focusing on highly liquid stocks like that than, trying to make your pick doing oil and gas. Now, oil and gas was the trade for 2022. I mean, oil and gas, because of the war in Russia and Ukraine, all of that stuff going, supply chains. We saw, I don't know about you guys, but gas is still pretty high here in Alberta, and so we're still seeing oil and gas outperform in some areas. But ideally, if a recession comes, then the price of oil and gas is going to drop. But because Canada's stock market is so heavily weighted to commodities,
Mhm.
it wouldn't be good for the Canadian Stock Exchange. But
Well,
the S&P 500,
Alberta
the
either.
Nasdaq. Oh no, exactly. And so, but that's why as a trader, I focus on the Nasdaq and the S&P 500 because it's just it just outperforms. So
Mhm.
So would you, for example, if people had their portfolio, recommend sort of like I know that there are stocks that you can have that sort of match the index.
Mhm.
So
Yeah, there's spider
would
there's
one that
spider
matches the S&P be
ETFs.
one?
Yeah, if you look up SPY, that's a spider ETF that matches the S&P 500. If you're a little more risk. This is not financial advice, by the way. Talk to a financial advisor before buying anything that I mention. But the SPY is something that you can own as a way to get exposure to the S&P 500. The QQQ is something you can own as exposure to the Nasdaq. And then there are also leveraged versions of that. So if you look at something like SSO, that's a 2x of the spider of the SPY. And so you can
Okay.
get, if your risk tolerance is a little high, you can get double your fund, but it's double your fund up and down. So you
Double the
do have to
cost.
be,
Yeah.
a risk manager first when you are actively investing. But
And at
S&P
the end of the
500 use.
Yeah, and for those types of funds, I believe that at the end of the day, there's always some type of adjustment that they are not typically long hold funds because of the adjustments at the end of the day. If you hold them for too long, you'll end up losing.
On the leveraged ones, they can be.
Yes.
They can be. Like if you hold something like NUGT, which is a leveraged version of the gold miners, it's a 2x. That's something that I always suggest the leverage stuff for short-term traders, day traders, that kind of thing. If you're more of a long-term investor, just don't mess with leverage. Leverage is a
made that
problem
mistake.
for a lot of people. There's a few things that humans love. It's sex and leverage. And and so you can get yourself in trouble with both of those things. And so if
Mhm.
you have problems with one, chances are you're going to have problems with the other. And so basically, I would stick to a no leverage investment portfolio unless you really know technical analysis and can be active in the market.
There's the spider. I'm looking at it right now. It
Yeah, I
entered the
mean that
market at
that goes up over time.
$44 in 1993, and it has continued to rise. It had its dip, like that was last year, and but it's going back up again. That's here's today, right? So it's up and down for today, but
Okay.
I mean,
Now,
it's if you can get fractals of that, because I can't afford to spend $441
for one share.
US for one share. So I'm going to
Are
see
there
if it's available in Wealthsimple and fractals, because that's what I use is Wealthsimple. And I've bought shares in Apple because they're fractals, and Tesla as well, because it's the
Oh,
only way
okay.
I can afford to do it. Right. I'm a
Gotcha.
very, very tiny player,
Yeah,
but
and
that's,
you can do the same with Bitcoin as well. Like you
mhm,
don't have to, if you're interested in Bitcoin, Ethereum, you don't have to buy an entire token. You can buy
yeah,
fractions of a token, and that's something you can't do with like physical gold. It's harder to do with physical
yeah.
gold. And so, when any basic explanation of Bitcoin, I'm always like, think of it as digital gold. You can buy fractions of it, and then you can still participate in the upside with as little as $5. You can buy some
Yeah.
Bitcoin with $5. So
Yeah.
that's something that I think is really good for people to get their fingers in to the
Mhm.
market and really kind of get going. And you don't have to risk a lot, right? Like
No,
to your point,
no.
you can just be like, hey, I got $50. I want to see what I can do with this.
Yeah.
And you can still participate. So I think the ability to buy fractional shares, I think is only going to be more popular. And I
Mhm.
think we're going to see more of that if stocks, I say if, but I really mean when stocks get put on the blockchain, where you can buy essentially a token or a coin of Apple stock,
Mhm.
that kind of thing, where it's fractional trading is easier. For my platform that I'm on, I can't do fractionals. I
Mhm.
got to do full shares, and that's it. And so I think that opportunity for retail investors to get involved is going to be huge.
Well,
So
it's a democratization of the market, right? Because for the first time in human history, an average working stiff with their phone, because everybody's got a phone, can download the app for free and get into the market for the first time ever in history with $5.
Mm-hmm.
That wasn't
yeah,
always the case. Like when I looked at trying to invest when I was in my early 20s, I'm like, well, I need $5,000 to buy in. Like,
yeah, yeah.
you
It
know,
was the same. I remember for me, I was 21, And I decided that, okay, I was going to start putting some money aside. And I went to the bank and asked them the same thing. This is, oh, well, you need a minimum of 5,000 to start. I was like,
okay, no,
really?
I guess not then. Good
Yeah.
luck with your shares.
Right.
Yeah.
But here's the thing I'm wondering, right? When you're talking about fractals, there used to be such a thing that like stock splits, right? You would
Yeah,
have, or
they
if a
still do
company
that.
had like stocks were too low and they wanted to raise the price, they put them together. They take 10 stocks, then now 10 stocks are one, and now instead of $5, it's $50.
Yeah.
Is it just that there's enough people, enough big players that are able to afford $440.84 a stock, US a stock, that they don't need to do that to not make it accessible? Because it seems to me that at a stock at $440 should probably be split so that it's available at 40 to more people.
Yeah, and like I said, they have other vehicles that you can use for, basically a version of the S&P 500. There are other ETFs that you can look at. I mentioned SSO as one. That's a leveraged one that I'm aware of that I trade sometimes. And so, yeah, there are other vehicles that you can use. And then, of course, with crypto, it's very similar, where you can just put as much money as you want in and, know that, okay, I'm risking all of this and here's the potential. So, I think and with stock splits, a lot of times it has to do with liquidity, because if I'm a major institution that has hundreds of millions of dollars to put to work, I can't buy it all in one shot. No one just buys, well, $100 million, here we go.
Yeah.
No, it happens over
They ladder them
time.
and stuff.
Yeah, exactly. And so, that's one of the reasons for stock splits, is to make it really liquid. Like, you can get in and out of Apple. It doesn't matter if you're a $1 billion institution or a retail trader. You can get in and out, and the spread is it's like 1 penny spread. There are others where there aren't as many shares. And so the spread between the bid and the ask is a little wider. And sometimes the stock acts a little crazier because people got to buy up and then they got to sell low. And so, those are harder for major institutions to get involved in. And so that's why you saw a stock like Tesla rocket up so crazily like it did in 2020, 2021. And then they did a stock split. And then they did another stock split.
Right.
And the reason they did that, one of the reasons, is liquidity, so that it trades a little smoother. And so you're not seeing as big of daily moves in stocks like Tesla, Apple, Microsoft, Amazon anymore, because there's more shares. And so they're more liquid, and it costs more money to move the stock where it wouldn't have before.
I just learned something. I didn't know that's how the difference between bid and ask worked.
That's right. Yeah. So it's a spread. A lot of it has to do with, it's market makers that organize all that stuff. But typically there's an ask, and that's how much you have to pay if you want to buy something. And then there's a bid, and that's how much you get if you want to sell something. And sometimes you get filled in the middle, depending on the liquidity of the stock.
Well, the one stock I've always wanted to buy, but when I first learned about it in 1996, when it was $33,100 a share. I'll put it on the screen in a second.
Oh, I think I know what you mean.
Yeah, and it's never split. And he says he will never split the stock. And I'm like, oh, okay, well, why don't I? Yeah, look at the price as of right this minute. This is a live feed for Berkshire Hathaway. $500,000 to get in. $518,114 USD to buy one share of Warren Buffett's company, Berkshire Hathaway.
I never knew that existed that way.
But that is Class A. There are Class B shares, and that's BRKB, and those are only $314. Sorry, $341.
And so you can buy fractals of those as well.
That's right. Yeah. B. So the class, there's different classes. Google has like 5 different classes of shares and stuff like that. And a lot of it has to do with voting rights and whatnot, for the people at the top. But I mean, you can buy Class B shares and still say that you own shares in Berkshire Hathaway.
Yeah.
So there are other ways to do it. And like I said, I think it's important for everyone to have some financial literacy, even if it is just opening up a Wealth Simple account, funding it with a couple of bucks and saying, okay, what can I do? Here's some play money. Let me figure this out. Because that's how I started. I read the Globe and Mail website, And I had a boss at work who was doing some trading and was bragging about how much money he was making. Hey, look, I did this and I made $400 today. And aren't I smart? And I thought, maybe I can do that.
Yeah.
And so I funded an account with $1,000 and was like, all right, let's figure this out. And I lost some money, I made some money, and then eventually I made some good money. And just trial and error, figuring out what stocks were moving, finding out the thesis behind the stocks. And for me, that just became really interesting because I got to learn not only about the market, but also just about individual companies. Like there are an amazing amount of great companies in Canada that are based in Canada that are international companies. You know, one that comes to mind is called Lithium Americas, and the ticker is LAC. And I bought Lithium Americas when it was like 75 cents.
Oh, wow.
And then, you know, and my thesis was electric cars are coming. You know, Tesla is the company, electric cars are the future. This is what they're going to do. And I don't know if you can bring up LAC right now.
Yeah, I've got it. I'll put it up on the screen here.
So
How far back do you want me to go?
So yeah, I started buying that. I was buying that company in like 2013.
Okay, so let's go.
And
80 cents.
Oh, wow. Wow.
And you know, and I made good money on it. And then I sold it and I walked away and I did other things. And then, you know, at one point you can see that was as high as $40. Well, that's an instance where I had a thesis. I had a good idea, but there were 4 other lithium companies that I bought and they all went to zero. And so you're not always going to get it right. You know, there's some of them are going to work out and some of them aren't. But every now and again, you're going to get a company like this, where it's just like they become like an actual international player. And so that research to me really became interesting and really became exciting. And that's what I've kind of transferred recently over the last couple of years, just into Bitcoin, Ethereum, crypto, and some other digital assets, where I'm like, I do research on the use case. I'm like, okay, does this piece of technology make sense to me? Can I see a future where people are using this? And you know, the answer is either yes or no, and what are the outcomes, and then you know I place my bet and go from there. And so you know, it's been a great journey of learning, where I've just been able to just soak in so much information where I feel like I understand the world more. And I think everyone would benefit if they understood the world more, how companies work more. You know, it's not as easy as, well, can't everyone who works for Loblaws just get a raise? Like, can what's his name? The Galen guy, can't Galen Weston just take a pay cut? Isn't it as easy as that? And you know, a lot of times it's not. It's not. And you learn that by learning about the market, learning about economies and why this works, and how it works and stuff like that. So yeah, you know, and it's made me, because I'm typically like, you know, I grew up a very left-leaning person in terms of you know, social aspects and everything like that, and even economics. You know, I was very left-leaning, and now I find myself as more of a centrist, because I took the time to, okay, I understand this is how it works. This is why it works. This is why companies want to protect the shareholders, because they know if they don't, that they'll go to zero and the company will go bankrupt, and that's not good for anyone. You know, that kind of thing. It's not just you know, and don't get me wrong, there have been instances where it's like, okay, that guy should go to jail. You know, coming out of 2008, and one person goes to jail. I don't know. You crashed the whole world, and only one person goes to jail. You know, it
was all your fault, Bob.
Yeah, and all of these bank CEOs getting raises and stuff like that. You know, we saw some of that coming out of 2020 as well. And you know, so I'm not saying I agree with everything, but it's a much larger amount that I understand now, where it's like, okay, you know, that sucks. People who are bad should go to jail. You know, I don't care how much money they have. If they break the law, they go to jail. I don't care what political party they're from. If they break the law, they should go to jail.
Period.
Instead of saying, you know, well, everyone in my club thinks this way, so I need to think that way. No, it's you know, being an active investor is all about thinking things when people think the exact opposite. You know, when Bitcoin recently, you know, when Dean and all the boys, who I love, by the way, were all railing on Bitcoin. Bitcoin's going to zero. It's all over. Ha ha, crypto bros.
Oops.
Well, guess what? Bitcoin is the best performing asset of 2023. So you know, when everyone thought it was going to zero, typically the opposite happens. And so you want to be able to understand that narrative, separate yourself from that narrative, and say, okay, what do I think? what do I really think deep down, and do I have the balls to put the money behind that thesis? Because it's easy for someone on the sidelines to say Bitcoin's going to zero, blah blah blah. My answer is always, great, short it. Bet against it. Put your money against it, because I'm putting my money for it, or whatever the thesis might be. Not just Bitcoin, but anything else. You can make fun of my my stock trade ideas all you want. Just take the other side first.
Well, here's the thing, right? It's like, I make the Bitcoin jokes. I do. I make them, and still, while I was making the Bitcoin jokes, I had a tiny little bit of play money. Like this, not one portion, not even 5%, less than 5% of my total portfolio, but I had a little bit. So let's just see what it does. Now, it didn't do well for me because I just went in and bought when I bought, and so let's just see what happens. And I didn't buy at a good time. I didn't lose a ton because I didn't invest a ton, but let's see what it's about. So, and I didn't pick one particular company. I just picked sort of like an ETF of general sort of Bitcoin and just watched, because I wouldn't know which one to pick to save my life anyway, which is why ETFs can sometimes help you. But yeah, it's like, we can laugh at it, but it might be something. So you maybe want to put $5 on it and see.
Yeah.
Right.
Yeah. Well, and just the more to really understand it, you got to buy it first. You can't. It's like trying to sell or trying to teach something to someone without selling them first. They need to make that investment in their own mind before you can fully understand it. And when I got started, like, I'll be honest, guys, I didn't know anything about Bitcoin. It was my brother-in-law that said, "Oh, you got to own this. It's internet money, and it goes up, and you'll make money." And I was like, I don't know. That's not really my investing style. So why would I do that? And then, I started buying Bitcoin, and I bought Bitcoin around, $9,000 US. And I was like, okay, well, let's see. I'll put some money in. And then what happened is, in October of 2020, on a technical level, it broke out of a nice weekly downward sloping trend line, looked good on a chart. And then it went up 500%. And then all of a sudden, I cared a lot about Bitcoin, because my small amount of Bitcoin that I bought is now all of a sudden, wow, that is a good amount. And I just made money. What else can I do? What else can I learn? And why is this happening? And so that's kind of the journey that I've been on over the last couple of years, because I didn't start out like, there's so many people who are on YouTube and do podcasts and stuff, and they've been in this, since 2012. And, they've rode up, they've rode down, they've rode up, they've rode down, and now we're down and they're ready to ride up again. And, and they have a lot of great experience. Well, I'm not that guy. I'm someone who is learning something new every single day about this asset class. And it's either confirming or challenging my thesis. And, a lot of it still confirms, like I said, Bitcoin is the best performing asset of the year. It's outperformed the NASDAQ. It's outperformed the S&P 500. It's outperformed a lot of things, and the worst bear market. And if it stops here, this will be the worst bull market in Bitcoin history. But so far, the worst bull market in Bitcoin history is only up 500%. And so a lot of us in the space think that this has the potential to do a lot more. Maybe we're right. Maybe we're wrong. We don't know. And that's kind of the bet that everyone has to make for themselves. So, that's kind of where we're at.
The last question is, it's sort of, I want to go to sort of like three different groups of people. So you're recommending, and it's something that I recommend now because the world allows for it. If you're a young investor and you're just starting, one of the first things you should do is open yourself a tax-free savings account and start doing something.
100%. Yeah. And don't,
even
don't
if it's just $50 a paycheck at the beginning, right?
Yeah.
Totally. Yeah. And just understand, like, okay, what do I believe? What do I really think about, about the market, about sectors? What do I think will be important, 9 minutes from now, 9 hours from now, and 9 years from now? And, if you kind of go through that framework of what do I think will be important in the future, then how can I benefit from that gaining importance, that kind of thing. And so, I've always, I've been lucky with technology where, like with that Lithium Americas company, I thought, electric cars, where do batteries come from? Lithium. Okay, let me find some lithium companies. I want to be based in Canada because I want to support Canadian. Let me figure some out that actually might have a future. And then, that's kind of how it it got going for me, where I was like, oh wow, I turned a little money into a good amount of money, and now I better figure out what I'm doing because I'm making money and I don't know how. And so once the more you get into it, the more I find you get really sucked into that world and like want to learn as much as possible. So, but to learn, you got to get started, and it doesn't matter. My portfolio started with $1,000, and now I'm managing, 6 figures, and that's only just in 15 years. And so it is possible for regular people, and I know that because I've done it. And so, and that's my job now, is to share that knowledge, share what I know with other people, and be like, look, you don't have to have dreams of being a millionaire, but you should, look at the market and say, how can I benefit from this? Because the market is the biggest wealth generator in human history, and the more people that are involved, the more opportunities you have to generate some wealth for yourself. Whether that's, hey, I want to make money so I can go on a trip, or hey, I want to make money consistently, like your friend who is doing dividends, and just if I could just make $200 extra a month and do it with dividends, great, that's perfect for me. Whatever your goals are, but you first have to decide, what do I really want? What is my goal? And then figure that out, and then work backwards from there.
Okay.
Well, I was just going to quick anecdote. Yep. Another buddy who a different guy retired at 35, and he had basically, he said, I have, after all bills have been paid and I've accounted for food, for gas, for, every bill has been paid, I've got $50,000 worth of pocket money every year if I live to be 100. And he says, and it's indexed because it will increase over time. So, 50,000 a year after all bills are paid.
Yeah.
Yeah. And I said, wow, that's really good. He goes, so I don't, I live a quiet lifestyle. He says, but he got bored after about a year because everybody he knows is at work. And the only people that he was able to hang out with were the old guys in his neighborhood that had retired, and they didn't want to play golf. They didn't want to do anything, and he didn't want to play golf. So he went back to work. He said the other thing that he missed was his previous job. He was a sales rep, and he traveled the world for work. So everywhere he went, it was always business class. So he worked in the Pacific Rim for about 15 years. So, he's in Australia, China, that part of the world. And he discovered, he loved to travel. But, once you retire, and business class trips are very expensive, and he didn't like flying economy class. He went back to work, and he's working for a very big company right now, and they send him all over the world again, and he's happy, and he's married, he's got a kid, house is paid for, and like he works his butt off. He worked very, very hard for everything that he has, but he was also, and he said, fortunately, I was in the right place at the right time in a lot of circumstances and instances. Like when you look at his business card, there's so many letters after his name, it's ridiculous. He also helped create some of those letters. So,
wow, that's very cool.
Well, if you've ever done any online banking with Scotiabank, yeah, you can thank him. He helped write that, helped write the algorithm for that.
Wow. Yeah, I mean, everyone needs a goal, and that's something I'm big on myself, because I have life goals, I have financial goals. There's things in this life that I want to accomplish. And if you ask most people, 9 out of 10 people on the street don't have a goal. They don't know where they're going. They're just floundering. And that's what can happen with some of these people. They make a lot of money and then they retire, and then they say, oh, wait, well, actually, I enjoyed that work, and now I don't know what to do. And so, what I would say is a takeaway from this conversation is figure out what your goal is. What do you really want to do with your life? And what's worth your time, because we only have a finite amount of time on this planet. And so figure it out. For me, I love helping people. I really do. I get a kick out of interviewing people, like on my Hot Wallet podcast. I love just talking to people and learning stuff. And so if I could do that full time, trade the market, help people, do a podcast, I mean, I'm living my dream. I mean, I'm actually living it now, because that's what I'm doing. And so, and I want to keep doing that. And my goal now is to get better, become a better teacher, learn more about myself so that I can relate more to other people who may be going through some of the same stuff that I went through when I was first learning to be an investor or learning to be a mentor or a coach. And so now, like, this year I've really been focused on my own goals, and then how can I be a better mentor to people, because I can teach them technical analysis, but when they come to tell me that they're emotionally struggling because this trade went bad, I didn't really have anything for them. I'm like, well, yeah, man, you should have sold, I guess. And now this year I've really kind of made that a point of mine to kind of learn more about that and learn more about the emotional side, the psychological side of trading,
What's the
based
swing
on
between greed and fear? That's what they
100%.
say for
Yeah.
trading, right? You swing between greed. Oh my God, things are going great. You should sell it now, but it's still rising. Let's keep it. Oh darn, it
Yeah.
dropped like this, and then fear. Oh my God, it drops all of a sudden. I should sell it. Sell everything. Well, no, no.
Yeah, exactly. And I've been through all those swings, like when I first started, I remember one trade that I put on. I bought the stock at $1 and then it dropped 50%, and I put a good amount of money in. And then I was like, well, I don't want to sell. I'm too sad to sell. And I just held it for like 2-3 years, and eventually it came up and I sold, but ultimately I sold too early because it went up 10x after I sold it. But
But it was
you know
dead
what I
money
mean?
for a while, right?
But it was dead money for a while. I remember my account balance was so low that I had to pay a fee every month just for them to keep the account
Yeah.
alive. But I was
Yeah.
too strung up in my own ego that if no, I really think this is something, and it's just a matter of time. And so, ego can be huge. And and I'm battling that on Twitter all the time, where I'll post a chart and someone says, I don't believe in that chart. Okay, well, that's your view, this is
That's your
mine.
view.
We're allowed to disagree, and it doesn't mean that what I think is wrong. And so really, and that's why I focus on learning yourself before you become an investor. And that's why they have those surveys. If you open up an account with a website called Quest Trade, they say, what kind of investor? What's your risk tolerance like? They're not going to ask if you hate your mom or hate your dad, although that will come into play when you have lost a lot of money.
Yeah.
You know what I mean? But they're, they ask those things for a reason, to know what your risk tolerance is, and then, the personality. So, anyone who's looking to be an investor, learn to get into this, you will learn so much about yourself that you didn't even know. And then the challenge will be to overcome that, and then, level up your experience in technical trading and then psychological analysis.
So as I was mentioning, so if you're young, you're starting out, let's say you open yourself a tax-free savings account. Let's say you just contribute $50 every paycheck. What are some essential things that someone young starting out should have in their portfolio? Either general classes or...
Yeah, I mean, you want to look at the major indexes, I guess, in terms of if we're talking about portfolio construction, which is not something I do officially. So again, not investment advice, but you want to focus on the major indexes. And, it's something that is, especially if you have a low amount of money, you want to have low risk typically, until you find an idea that really resonates with you, an idea that gives you that burning desire of like, no, this is going to be something. And I've done my research. If you put in 100 hours into researching something, and you take all ideas, whether it's something that confirms your idea or something that challenges your idea, and at the end of it still are like, no, I think this is good, which is what, that's the roller coaster that I went on with Bitcoin over the last little while, where I held some Bitcoin. I held it all the way up and I held it all the way down. And at the end of it, I was still like, no, you know what? I still think it's good. And so, okay, what do I need to do then? Well, I need to look for opportunities to increase my position while the market is, what I think is dislocated from where the actual value of this asset is. And so that's what I would say, but really focus on, an idea that makes sense to you. And that's one thing that Warren Buffett talks about. Don't invest in something that you don't know. And the reason you don't want that is because that is what will make you sell before you should. If you don't understand what you're investing in, then every tick in price is going to give you a heart attack, and you're going to say, no, I'm not sure right now. And then eventually what can happen if you do that too many times, we call it death by 1,000 cuts, where you take small loss after small loss after small loss. And eventually your $1,000 is now $500 just because you couldn't make up your mind.
Right. Okay. Now let's say you're somewhere in the middle. When I started investing, I started with just basic mutual funds, and I took a little bit from everywhere, and then the tax-free savings account came in, and then I opened up and I started more as a commodity investor. So around 2009, because oil was going up and down like crazy, and so was gold, and playing the swings. And then after the commodity market sort of cooled down, and I got hurt a couple of times, I went more to what Paul is saying, more dividend-paying stocks, and it's like pay daddy while he waits. So, so. But let's say you're around my age now. You're like 45, 50, right? You have some savings, you have a bit of a portfolio, but maybe you're too cautious. Maybe you have too much in banks and in life insurance and Bell Canada, BCE and TELUS and those types of things. Where would you suggest are places that people could look if they wanted to diversify a little more because they're maybe a little too risk averse?
Yeah, again, it depends on what your goals are, right? So for me, I look at technology. And so I've been focused mainly on Bitcoin, Ethereum, and digital assets because that is the fastest adoption of any technology since the internet. Blockchain technology is the fastest ever, since the internet. And while we are kind of, coming off of the bottom here, I still think that technology rules and you want to follow where developers are going. So if people are coming out of MIT and they're going towards blockchain and artificial intelligence, well, that tells you where the future value is going to be accrued because that's where all of the talent is going. And so you really want to focus on where the important talent is right now. And so we're seeing a lot of stuff in terms of electric cars. We're seeing, Tesla really become the leader. All of these other car companies, Ford, General Motors, et cetera, they're all adopting the Tesla charging standard. And so, okay, now, I think that this company is going to, probably still do well. And here's why, because I see what's happening under the surface and I see the potential upside of the electrification of, ICE cars, industrial internal combustion engines, that kind of thing. So, again, it starts with your thesis. For me, I've always been someone who is technology forward and open to technology. And so that's where I would say, look at some of the Bitcoin mining stocks. Look at something like BLOK. Again, not investment advice. Don't sue me if it doesn't work. BLOK is something that is an ETF that has, they have some crypto miners, but they also have stocks like Oracle, IBM, something like that. That's been really good over the last couple of weeks here, where we had this really nice. I don't know if you guys can bring up the chart. It's It's had a really nice sideways consolidation coming out of, let's see, I'm just going to flip to a daily chart here. Yeah, so you can see how it's gone sideways. So from April to middle of June, it just kind of, flipped to a 6 month. Yeah, so from April to middle of June, it's gone sideways. And you really, as a technical trader, I love sideways consolidation bases, especially ones like that where you can see the lows on price are progressively higher. You want to pay attention to something that has a higher low, and then that's just surface level TA for you.
So for people,
why is that?
Hold on. So for people listening and watching, that's if you look at all the lows along the way, if you drew a straight line to the bottom, that would connect them as much as possible. Whether that line goes up or whether that line goes down is what matters.
That's right. Yeah. And you want to pay attention to stocks that have higher lows. Now, that's because even when the stock dips, buyers step in to the market and buy that stock up to keep it higher, so because they see the value. Oh man, I got to get this before someone else does. And then what happens coming out of a nice base and higher lows is what we've seen over the last couple of months here. So starting in late June, July, BLOK has been a great trade. And so, but you want to pay attention to it before it makes that move.
Right.
And one signal that we use for technical analysis, one of my favorite setups, is just a long base of consolidation where you just see prices in a real tight range. And that means that the sellers aren't aggressive and the buyers aren't aggressive, but it's showing you that someone is, someone or a group of people are coming in there because they see the value and they say, okay, well, I think this is going to be good. And so they keep that price kind of at a flat level. And then as a technical trader, you can draw a line and say, well, if it drops below there, I guess I'm wrong. And so, then that's what what your risk tolerance is. Say, okay, maybe if it drops 5% from this level, it's going to break that line that I drew. And here's how much money I'm going to lose. So because of that, here's how big I can be in that position. So maybe I don't want to put $100,000 in a stock and then lose 5% because, that's actually a lot more than I expect. And so maybe I want to take, you know what, let's just buy a couple of shares. I call them like speculative shares or one share. I'll buy one share. And then if it does start to break out of this base, then I'll add to my position and kind of, get rewarded that way. Again, there's like a million different ways that you can do it. And that's the great thing about technical analysis and trading is that you get to figure out what it is for you. Maybe you want to buy things that are at like a deep, deep discount. And you say, no, I'm going to do my research on these companies. And even though they crash down, I'm going to be the one to buy there because I see the value, based on whatever metric that you're looking at. So there's so many different ways to make money in the market.
Okay. Finally, let's say you are closer to retirement or newly retired. You've got some money coming in, and let's say it's more than you need to live on. So you have a little money that you can still save. But obviously, you don't want to take a big risk because this is your retiring money. What would you suggest for people at that stage in their life?
Yeah, again, I'm not a financial advisor, so I would recommend speaking to a financial advisor first off and see what they say first. But from an active investor trading standpoint, I would then just focus on the major indexes like we've talked about. Look at the S&P 500, look at the triple Qs, the Qs or the NASDAQ, it's probably going to outperform a little, again, because technology tends to outperform a little. And so that's what I would do. Focus on the major indexes, keep it simple, and don't feel like you have to buy, 100 different stocks. I've never met anyone that makes money buying 100 different stocks unless they run a fund and that's legit their job.
Right.
But for, retail guys and girls, retail investors, keep it simple. Focus on a few things. My account right now, I'm only in 2 stocks and I'm fully invested. And that's 2 stocks. That's it. And I'm fully invested. And, wow. And that's fine for me. That's my risk tolerance. And, and it's been a great trade the last couple of days. But maybe that's not for everyone. Maybe they do want to diversify a little more because they have, whatever. They're not in front of the screen looking at the ticker every single minute of the day. Right. I am. So I feel like I have that flexibility where I can just set a stop loss and know I'm not going to lose any money after that. Or maybe I'll take part in the upside. So, for me, less is more. If I'm, I'm really focused on a few things right now, but there are times where I'm like, I can own 5 things. If I have $100,000 portfolio, maybe I'll put, 20,000 in each thing, and that's going to be my max position, and that's fine. But for now, for right here, I'm really focused on just trying to outperform some of these moves. We've seen some crypto miners go over 100% in the past 20 days, and so when you get these big outsized moves, you from an active investor standpoint, you really want to focus on, trying to capture as much of that as possible. Like if I look at Coinbase, for example, from June the 6th to today, Coinbase is up 80%. Well, if I have a good portion of my account in that one stock, then my account as a whole is going to be up a big amount. And so again, that's not for everyone. That's for someone who is like focused on the chart and they're actively trading. And so because I feel I'm at a comfort level where I can do that, where I can focus on just a few and then, ride those trends for more than just a couple of days because I have that cushion. The main thing you want as an active investor that I believe is just have a cushion, have a nice profit in a stock. And I want a profit in a stock before I'm buying more of that stock because I want that cushion. I want to make sure that I can withstand the ups and downs because nothing goes up in a straight line. And if it does go up in a straight line, you better get ready to sell because you're going to get those highs like this. But then, it's also going to be volatility to the downside. And we saw that with GameStop, where we saw GameStop go from a $20 stock to a $400 stock. There are some people that are still holding GameStop, but that stock went straight up. And then what happened? It came straight back down. And so that's one thing where it's like, wow, when I start making a lot of money quickly, then I know it's time to be close to the exits, because if it's coming that fast and I'm starting to feel real smart, like I have a genius detector. As soon as I think I'm a genius and I'm bragging to my wife and I'm showing all my friends all my profits, that's the day I got to sell, baby, because because I'm obviously late in the trade at that point. A good trade, you want to question it for most of the way up and down. And, you want to question, it's like, okay, maybe I'm not sure. But then when you're like, okay, everyone agrees with me now, it's time to sell.
Okay. Has there been any time where you have, in the last little while, where you've decided, nope, because right now you say you're fully invested. Nope, I'm not invested, or like half or less.
Oh, totally. Most of last year, I was in and out, because the market was choppy and down. And so when it's choppy and down, you don't want to be long-term invested. You want to be very nimble in your positions. You want to be able to get in, get out. And so
That's if
last
you're an
year,
active trader.
what's that?
That's if you're an active trader.
That's right. Yeah.
Right.
And so long term, you really need a catalyst. Like if the market is going down, 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 you need to wait for that catalyst where the market says, okay, that's enough down. Let's change trend. And that's what we saw in October with that peak in inflation. That was the catalyst that started the market to really firm up and start moving up again. After that, it was just interest rates are going up, and the market's going down, and the dollar's going up, and the market's going down. And so, so there are many times and that's one thing that's great about being a retail investor, is you get to be way more flexible than everyone else. It takes Warren Buffett a long time to get out of a position, because he has hundreds of millions of dollars of that stock that he's got to unload. And again, he can't dump it all in one day.
Yeah,
As a
and
retail investor,
and if it's Warren Buffett, there are people going, well, if he's getting rid of it, what's wrong with it?
Yeah,
exactly.
Who's going to want to buy it?
And usually when the news comes out that he sold a stock, well, that stock gapped down the next day, because everyone's like, oh crap, I thought he owned it. And so, but that's what's great about being a retail investor, running our own money, is that we can be in and out of stocks as frequently as possible. As long as you don't mind paying the commission charge for for those buys and sells, you can be as liquid or illiquid as you want to be. And so, there was a time like 2 weeks ago where I was just like, nothing today. I'm in cash, and I'll just sit and wait and be patient. And that is typically where I make the most money, is where I'm patient, looking for that proper setup. One of my playbook setups that I like, a long base or a clear line that I can draw. I keep it real simple. And then I just look for an expansion of that move, typically out of a base on a chart pattern. And then that's when I'm like, okay, the market is changing its mind on this now. I'd like to try and ride that trend.
Mm-hmm. Cool. Scott, thank you so much.
Guys, I feel like I've talked so much, and I'm sorry.
No. This is our style. We have a couple of questions, and then we believe in. I mean, normally we talk politics, but we believe in doing politics in full sentences. So I think when it comes to investing, it should be the same thing as well. So no, we are quite happy that you had a lot to say.
Yes.
Awesome. Oh, thanks so much for having me, guys. I really appreciate it. Big fans of the show, and anytime you guys want to talk stocks, Bitcoin, or whatever, I'm here. So thank you.
Okay, and if the Kits and Cubs are watching and they want to find you, where can they do that?
Yeah, Twitter's the best place, at Scott Trades on Twitter. And then my website for Hot Wallet is hotwallet.ca. And if you want to learn how to trade and trade the market, we have a ton of tutorials on our website at stockmarketmentor.com. Like Netflix, you can just be like, hey, I want to learn about this indicator on a chart, or maybe I don't know anything, and I can start here. We have a ton of tutorials. The guy I work with, Dan Fitzpatrick, he's been teaching people how to trade for over 20 years.
Oh, wow.
And he's featured on CNBC, Fox Business, Investors Business Daily, Sirius XM Radio. And and I'm fortunate enough that I get to be on this ride with him, and that he trusts me to help his members. So
Nice.
definitely check out stockmarketmentor.com. You can take a trial, $7, and you get 14 days. You can consume as much tutorials as you want, and then decide if it's something that you really want to pursue.
That's wonderful.
Cool.
Thank you so much.
Thanks, guys.
All
Have a
right.
great rest of your week. Enjoy your vacation.
Thanks,
All right.
man. Take care.
See ya.
Okay,
Bye.
see ya.
Oh, well, there. That was fun.
Yeah, that was a blast. And
I don't know
educational
if
too.
Yeah, I don't know if it was maybe a little dry for our kids and cubs. It's a subject I'm particularly interested in. I'm not as involved as in it as Scott is, but yeah, as someone who self directs his own account, it's financial literacy, especially now that it's accessible and that we have something like the tax-free savings account. There's absolutely no reason now that we shouldn't be teaching younger Canadians,
Yes.
that it's time to take care of themselves, because my personal belief is that every single person should have some pool of money somewhere that is passively earning them additional income. Because when you get a situation like we just had right now, major inflation over a course of a short period of time, you need something to help cushion this, and you need a source of income that doesn't come from the sweat of your brow.
Yeah, well, I'm still working on that.
Yeah, well, we're working on it. I'm trying to help, my friend.
I know.
Kits, that's the end of this episode of the Daily Beaver podcast. We hope that you love listening to us, because we loved making this for you. Remember that sharing is caring and word of mouth is priceless, so please let your peeps know about us. And because democracy is something that you do, well, please write your MPs, please write your senators, write your local media. Let them know that you demand better. And if you have a couple of extra coins jingling in your pockets after you've made your investments in your trades, invest in your fellow citizens by making a donation to the Red Cross. It's also a good investment. All right.
Indeed.
If you really like this podcast, you can find us on the Crier Media Network, as well as all Beaver Grizzly friendly platforms. Stars and reviews are greatly appreciated, so please be generous. And we love to hear from you. So reach us on our Facebook at True North Eager Beaver, our Twitter at True Eager, or by email at truenortheagerbeaver@gmail.com. You can also subscribe to us via our pod page, and we will come to you when we have something fresh off the bandwidth. That's podpage.com/the True North Eager Beaver, lowercase letters with a hyphen between each one of those words, and you will be able to do that. We'll come to you every single time. We come to you. You don't even have to find us. And if you are watching us right there, and if you look at that little squiggly at the bottom, that will bring you to our pod page if you use that with your phone. If you are watching us on YouTube, why not subscribe to our True North Eager Beaver Media Incorporated YouTube channel? That helps us out big time. And make like Kit Elaine and smash those buttons. Just because we're pre-recording doesn't mean we don't smash.
That's right. That's right.
We can't do this without your kind and generous support. So if you feel that we've done a particularly good show, if you're watching, you can scan the QR code that Mr. Grizzly has just put by his head. And if you are listening, you go to our coffee page, and that's coffee spelled ko-fi.com/eagerbeaver, lowercase letters, all in one word. And that will bring you to our emergency hydration fund, where we hire staff to help us produce and write and do everything else with this show. So coffee, hot chocolate.
I'm staff.
Hi, staff. Good help is so hard to find these days, and I found the best. Yeah. So there you go. So coffee, ko-fi.com/eagerbeaver, lowercase letters, one word, and that's where you can make your donation. From the Beaver Lodge, this is your Eager Beaver saying, until next time, dear kids, it could be a tough world out there, so please be kind to and gentle with yourselves. Mr. Grizzly, some words of wisdom, please.
Pepto-Bismol is your friend.
There you go.
That's what I'm going to leave it at right now. I'm not doing good at the moment.
Stomach, indigestion, heartburn, diarrhea.
Yeah, it's your friend.
All right, Mr. Grizzly, please roll them credits.
You are listening to a True North Eager Beaver Media Podcast. The True North Eager Beaver podcasts are proudly brought to you by our founding sponsors, the Miss V Mysteries from Corvid Moon Publishing, your source for science fiction, fantasy, and cozy mysteries featuring a broad diversity of characters. CanadianTarot.com, your uniquely Canadian online eclectic tarot community and forum, and The Peppermaster, hot pepper sauces made from fresh farm ingredients to thrill your taste buds and expand your mind.
Yeah. And just some slight programming notes since we're time traveling. Uh, if you're watching this last week, but this morning, on the day that we're recording, I said that at the first 2 days of this week I was going camping. I was mistaken. It seems it's the first 2 weeks of the following week that I'll be camping, but I'm still
Oh,
away Monday. So I don't know if saying this show, if you're watching it on Monday, if I'm saying tomorrow we're doing a live one, a pre-recorded one.
okay. Yeah, that makes sense.
So I don't know if for the what date would it be? The 18th? If we
Sure.
are, yeah, if I'm doing live, or Mr. Grizzly and I will be able to do live. So there might be a recorded one on the 18th anyway. Don't tomorrow if you're watching now, and if not, then we'll be live with you. But we'll figure it out, and you'll be surprised. So there you
There
go.
you go. Surprises in store.
Bye, kids.
See you later.
Time travel. Wee.